Okay, guys, welcome back to part
19 now.
19 of Back to Basics, where I'm taking my lovely fiance Jessica here. While we're stuck inside in quarantine, I'm teaching her how to trade. We have a playlist on both of our channels. Again, we're well into it at this point, so if you're just stumbling across this now, you can go back on both of our channels and check out everything we've done there. If you're seeing this on my channel, Jessica's will have the next version. And if you're seeing it on her channel, come check out mine. Trader for 12 years. I do a lot of statistical analysis and auto trading, quant type stuff if you're interested in any of that.
And I'm a dental hygienist.
We just finished a very high level version of technical analysis. It took us 18 episodes to get there. As you can see, it's kind of a fine art that takes years to build and to master, and I've been doing it for years and I don't even consider myself anywhere close, but it's time we go and do another high level of all of the other ones and then get you trading. There's basically 3 tiers of analysis when it comes to trading. It's technical, fundamental, and statistical. So we have left technical behind for a bit. We'll continue to do some chart reviews randomly, make sure it kind of keeps your brain in that mode, but we'll be leaving that behind and we'll be going through fundamental analysis. Now, fundamental analysis is a massively deep topic, just like statistical analysis, but we'll go over it here. There's a lot of pros and cons to it, and there's a lot of reasons that we don't use it a lot as short-term traders, so we're going to kick out a lot of that. Most people, when they talk about fundamental analysis, we'll talk about in a second, it's very deep, it's very mathematical, it's very looking through like income statements and balance sheets and
sounds like fun.
Yeah, well, stuff that we don't want to do because it's the time investment versus the profitability from it is not there. And then there's again some other problems. Just a dictionary definition of what fundamental analysis is, but essentially most of them will use this kind of top-down level approach. Analyzing the economy is what's first there, which basically just saying, okay, what does the world look like? We're in quarantine right now, so the economy is in absolute shambles. We would look at that as your top level of, okay, is the economy in a good place? Basically, just are people employed and are people buying things? Is basically where the economy is in good shape. Do people have money in order to buy things, to go into the system and create more jobs and do all this, or is it a harder time for people? Then we go and we analyze the sector. Every company is going to exist in a certain sector, and every sector has its own pros and cons when it comes to trading, right? Apple's technology, they can release things that will change their revenue models quickly. Something like Ford isn't going to release something that's going to completely change the entire company. They may come up with a slightly better car, but then also different sectors are going to sell at different price points. When you're going to buy a house, that's a much more long, involved process than if you're going to buy a hamburger. So every sector is going to adapt to what the general market is doing completely differently. And then, looking back at the economy, if the economy is great, just looking from a retail point of view, some of your higher end retail stores are going to do very good. And if the economy's poor, places like Walmart are going to do better. Right? If you've got less money, you're going to go from the more expensive place that makes great stuff into the cheaper place that might make not so great stuff. This is the part that we're not going to do, which is analyzing financial statements, which is where someone would go through and say, okay, I want to find out Apple, for example, how much money they make, where do they make their money? Do they make their money on computers or phones? Do they make their money on this? And you're analyzing where all of the income of the company comes from, where all the costs are spent out, and how those are going to adjust. Again, we don't do it, just this is your basic understanding of that kind of stuff. And then using a current valuation where they say, okay, I think Apple is going to make X amount of money in the future, therefore I think the company is worth this. You divide it by the amount of shares are out there, and you say I think the company's price should be this. None of that really works for the short term. May work for the long term, but it's not the game that we play kind of thing. However, we do use this because it does have some strengths, right? One is great for detecting where your risks may come from. For example, if you're say you had a great rising wedge pattern that you wanted to short into. That was you like the Head and Shoulders. So you see great Head and Shoulders and you're like, I want to short this company. And then you go look at what the sector it's in, and it's a biotech company. And then you go read about the company, and they're working on maybe a COVID treatment. That may negate your short because it changes the risk reward parameters, right? Now it's all of a sudden a company that tomorrow could double.
Right.
Right. And if you're short, that might be something you're worried about. So that's a great way to look at where are the risks going to come from that I'm dealing with. The other is the sector analysis. Some sectors become hot at certain times, right? Right now, a lot of the sectors that are doing well are your streaming companies, your Netflixes and your Disneys, because right now there's a lot of money being pumped into those companies. And what this does, it creates this volatility because people are fighting for what they think the new value of these companies are. Same thing happened with the weed sector and cryptocurrencies back in the day and all of these different things. And then, is it a real company? This is more important if you're looking to buy the company. Does the company make any money? Does it actually do anything? Or is it something that is more likely that you're going to turn on your computer the next day to see how your trade's going and the company's worth nothing? And there are companies out there that are traded that are just, they don't make any money, they don't really create anything. They're just, maybe they got a bunch of cash and they went public with it. You got to be careful. And why do people care, and do they care? General Electric may have a great technical pattern on it, but it's a giant conglomerate company that isn't going to move very much, because when's the last time GE's released anything you given a shit about? I mean, they make light bulbs and stuff. It's stuff that people are going to buy anyway. Maybe they'll buy a little less, maybe they'll buy a little more, but it's not exciting, right? And what we're trying to do is we're trying to beat the market. So you're trying to buy a stock and you want to make 20-30% return on it. People have got to give a shit about the company before that's going to happen. Make sense?
Yes.
No questions?
Nope.
Again, this is a very high level look over. So what are the weaknesses? Does not contain a full trading plan is the first thing. So say you were someone who did all this analysis and you said, okay, Apple's trading at $100 right now. I think it's worth 150 because of all this math. I think this new iPhone, they came out with a cheap iPhone. I think it's going to sell great. That's going to bump revenues. That's going to make it work. So you're saying, I think the company's going to go up. Well, if you notice, everything I've done and I've taught you so far in technical analysis has a place that you enter, a place that you're wrong, and then generally a place that you look for the stock to go to, right? Those are the three parts of a trading plan. Just saying the company's undervalued is not a trading plan, right? When are you wrong? Where are you right? What are you looking to do? How long are you looking to hold? Things like these are part of a plan. CEOs lie, CFOs lie, price does not lie. And this is like kind of a technical analysis mantra. This is me indoctrinating you with our beliefs. But
is that what I hear you chanting in the bathroom every morning?
Yeah, exactly. But you think about it, right? If Tim Cook, who's the CEO of Apple right now, he's never going to come out and say, listen guys, that last iPad we made sucked, right? You've heard me curse at the keyboard at this thing and almost throw it out a window a couple times. He's never going to come out and say, yeah, we made that and that keyboard really sucks. He's going to sugarcoat it. He's going to say, this is what we learned from it and looking into the future and blah, 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 right? He's
His name's Tim Cook?
Yeah. Remember Trump called him Tim Apple?
No, I don't remember that, but I do know that Tom Nook.
Oh, Jesus. Maybe, I don't know, maybe
it could be, yeah.
Maybe it's a play for all I know.
I didn't realize. Okay, sorry.
CFOs lie, right? Again, and by lie, I don't necessarily mean that they're just fabricating numbers and stuff, but they're not going to tell you if Tim Cook thinks that in a year from now, there's going to be a real big problem for Apple coming up. He's just not going to talk about it. Right? He's going to try to fix it by the time it gets there, but he's just not going to talk about it. Whereas if the price on a stock is downtrending, then the price on a stock is downtrending. Right? That you can't go back and change a price. For example, all the time companies report earnings and then the next year they revise last year's earnings. They say, oh yeah, we forgot about this massive expense. So we're just going to go back and change what our last year's earnings were. You can't change yesterday's closing price. It just is. Right? It's what happened. And then I always put they, and that's for my conspiracy theory friends, they know the news first. It's a super common thing in trading that all of a sudden the stock's going along and it makes a big spike, and then it goes along for a while, and then 3 days later you hear that the company's released a new product or something that comes out. Really, it's, you got to think about a company like Apple, right? A massive company. If they've got a new cool piece of tech that comes out, they're not keeping that under wraps forever, right? It's going to get leaked through someone that works in the design department or someone that works in the marketing department or whatever. So the point is, by the time you hear the official news, little people, they've already known about it. It's kind of gotten out there, and then it can taint your directional bias. If you're like, okay, I think Apple's a great company and they're going to make great stuff, and this new whatever they came out with is awesome, it can taint your bias for what the actual chart is telling you. The chart is telling you to sell, it's in a downtrend, don't worry about it. But if you spend too much time on the fundamental side, it may sway your thinking of the company. So those are the main cons. This is how I use fundamental analysis. So there's kind of a checklist that I come up with. And the main thing on the bottom I want to point out is that I use as a risk metric, not a profit one, which means essentially that, like we kind of talked about before, I'll look at a company and I'll say, okay, what sector is it in? Is it something that's risky right now? For example, in COVID, could be airlines. I could want to buy an airline, but in my head, I got to say, if they come out with something that says, okay, this thing's mutating now, well then, because everyone's already priced in that COVID exists and eventually people are going to start flying again, but we don't know how far out it is. Now, if they say, okay, it's mutated and it's worse now, then that distance of when people are going to start flying is pushed further back. Therefore, the company's going to get hit. So I'll just keep those in my head when I'm looking to buy or sell these stocks. So what sector is it in? What does the company do in this sector? Does anyone give a shit? As we covered all these. Do they make money? Potential upcoming news catalyst. So, for example, Apple every year in June, that's when they announce what their new phones are and everything. If I'm going to buy or if I'm going to trade Apple, I want to know if in like 2 days they're having like one of those big, keynote events where they all stand on stage, and because that's going to affect the stock. Any news pitfalls coming up, right? Are they going to report earnings soon? Are they going to report any of this? As you're seeing with this earnings survivor you're playing in, these companies make wild, unpredictable moves.
Which I'm still in and he's out.
It's the first time I've heard that. I'm sure it will be the last time too. How do we find all these things? And this is something we'll show. We're going to start kind of intermingling practice along with our theory within the Trade Ideas platform. And this is just a way to do it. So, you can take a look here. And for example, look at the bull flag currently going on right now in Apple. That's why I used Apple as the example throughout this. You can take a look within Trade Ideas and you can say, okay, well, they're in the manufacturing of electronic products, just in case you didn't know what Apple did. And here's a little just summary of what they do. Then up here you have certain other metrics that we'll talk about, and this is more like what the next lesson will be about. But how many shares do they trade a day? There's 52 million shares that change hand in Apple every day. How much, this is just kind of proves that they earn. On every share, they make on average $12. That's down from this time last year. Right? So all of these numbers are given to you right here. So just to make it, that's just kind of my final word to say, don't worry, this is not daunting. It's not like you're going to have to look at the chart and then go to 5 different websites to get all this information.
It's all there.
You just lay it out like this, and then all of a sudden you say, okay, I like the pattern. Now let me do a check to see. Also, we have things like earnings date. So you can say, okay, they reported earnings April 30th. Generally, a company reports once a quarter. So you've got a long time to worry about it, right? So again, I know there was a lot of boring information, but basically what I'm going to train you to do is look at the chart, look at the technical pattern, scan this stuff just to make sure there's no risks in the way, and that you understand what the company does, and then place the trade, which is kind of our role of fundamental analysis. There's people who do it completely the opposite, where they say, I want to buy Apple because of this fundamental reason, and they'll wait for a technical pattern to occur in order to get in. No questions?
I don't think so. That was a lot, but
I'm going quickly with this one because it's the least relevant for you.
Okay.
Right? I want to focus on the what to avoid. You you'll never need to know earnings per share calculations. You'll never need to know debt to equity ratio stuff. You just won't. So I want you to know that it exists, because again, our job is to find out what people are going to do next for whatever reason, and then try to be a little bit before them getting in and try to be a little bit before them getting out. Okay, so if that's it, we'll wrap that up and we'll see you guys next time.
Bye.